anytime there is a pattern shift, it means something. This is the same behavior that we saw in 2000, in 2008, and in 2020. Right now, we're seeing that same kind of pattern shift in the economy and in the metals markets. You know, I talk about the importance of understanding when a pattern changes, even if you don't understand the implications of it, because anytime there is a pattern shift, it means something. And right now, quite honestly, we are seeing a major pattern shift, because every major structural failure has a pattern that shifts before it breaks. Before a bridge collapses, engineers don't see the whole thing fall at once. They see micro fractures. They see stress lines. They see subtle shifts in weight distribution. The pattern changes long before the failure becomes visible. And that's when you want to know about it. Because right now, we're seeing that same kind of pattern shift in the economy and in the metals markets. Weak GDP tells you that the economy is slowing. Sticky, I love how they call it, sticky inflation tells you the cost of living isn't easing, and now it's probably going to go up faster than they would like it to. A rising debt tells you that the system is becoming more and more fragile. The underperformance that we're seeing in the XAU, which is the mining index, tells you that Wall Street sees risk, not opportunity. And consumer sentiment, well, you know that's something we watch constantly because it's weakening and it's getting worse. And these aren't isolated data points. They're the early stress lines, those micro fractures that show up before the system reveals the real damage. And that's when you want to be in place. When these four indicators move together, it tells you we're entering a late cycle environment. And frankly, in every late cycle environment, the first place you see the shift is in what people trust with their wealth, that collateral. Here's the long-term pattern most people miss. Over nearly 2 decades, physical gold and physical silver and those spot markets have steadily climbed. Meanwhile, the miners, the companies that dig the metals out of the ground, well, look at it. They've lagged dramatically. Why? Because miners carry risks that the physical metals in your possession do not. It's pretty easy. They take on debt. They're corporations. They take on debt. They have energy costs. They have labor costs. They have political risk, huge. They have equity market risk. They have management risk. But physical gold and silver, well, they carry none of that. So the long-term divergence is the signal. And this chart shows a long-term divergence, a pattern shift that becomes obvious only in hindsight and distance. And we've been taught to think in 10-second cycles. Oh, that happened 15 seconds ago. It's irrelevant. But that's not true. Because when the system weakens, those real assets, they outperform the paper claims on those assets. And it's only been relatively recently that you've really been talking or hearing those talking heads talk about gold and silver. But long-term trends tell only half the story. The real warning comes when the short-term pattern suddenly flips. And this is the moment where the pattern changes. In the short term, we're seeing a sharp rotation into gold and silver, not from long-term investors, but from traders, institutions, and Wall Street desks. This is the same behavior that we saw in 2000 before the dot-com unwind, in 2008 before the credit markets cracked, and in 2020 before the liquidity crisis hit. The short-term pattern shift is always the tell. It's the moment when the market stops pretending that everything is fine and starts to quietly reposition for stress. And we've certainly seen that with the global central bankers positioning into gold. And that brings us to the phase we are entering right now, the late cycle chase. And remember, we've been talking all year about the pattern shift where the contract markets dictate price discovery to the physical markets dictating price discovery, as it should be, true supply and demand. So we're entering that late cycle phase where Wall Street chases the metals rally, right before the stress becomes visible in the broader system. This is the classic sequence. Micro stress builds, long-term trend favors real assets, short-term rotation accelerates, and Wall Street piles in late. Then the stress becomes undeniable. Look at what's happening. This is the pattern before every major break, and we are watching it unfold in real time. Are you recognizing it? What are you going to do about it? So here's what happened in 2008. Here's that snippet. Spot gold held its value until it had to bail out falling stocks. Then you could see that the spot gold contracts imploded just like they're doing at the moment or through this late cycle. Because when confidence breaks and when the markets break, well, people run to monetary anchors, but you got to sell whatever the market will buy when those margin calls occur. We've talked about this many times. So gold stocks, on the other hand, the XAU, that collapsed with the rest of the equity markets because they're still paper. They still live inside the system. And when the system breaks, they go down with it just like those spot gold contracts for a minute. But look at the collectible coins. They spiked. Why? Because this is the only physical only market that there is, and it really does show true supply and demand. The collectibles are driven by physical scarcity, not leverage, not derivatives, not Wall Street liquidity. They behave like a completely different asset class because they are. And that brings us back to the pattern shift that we started with. Because engineers know that structures don't fall all at once. They fall in patterns. First, the long-term stress lines, then the short-term fractures, then the sudden shift in weight. And only after all of that, the visible break. Right now, the economy is slowing and we're seeing the same sequence. Long-term divergence in real assets, short-term rotation into safety, late cycle chasing behavior. The pattern is repeating. The warning is here, and the question is whether we recognize it in time. Because when you understand patterns, you don't wait for the break. You act, you prepare when the shift begins. And guess what? If you missed when the shift really begins, what's the second best time to act? Today. Maybe you missed it yesterday, but catch it today because tomorrow might be too late. Right now, the long-term pattern is crystal clear. The short-term rotation, it's underway, and the late cycle chase has already started. This is the moment when people who see the pattern quietly reposition into strength. Intangible is not strength. Physical is strength. Into assets that don't depend on confidence or policy or promises. Because once the stress becomes visible to everyone, like it did in September of 2008, well, we were talking about it long before that, and the central bankers were accumulating gold. They changed their pattern shifted in 2005. So pay attention to this and all of the pattern shifts that I show you. Reposition into what has held value through every single cycle for thousands of years. Proven. And build that foundation before the broader system reveals the cracks. Each pattern shift is a reminder that the window of choice narrows long before the break. Get it done. Because the people who act early are the ones that keep their options open. I'm so glad I started positioning into gold when spot was at $258 or $48 an ounce. Don't you wish you'd have done that too? But you want to do it now, even at what appears to be lofty levels, but yet they have suppressed the price of gold and the price of silver because they can do it with all those paper contracts. Don't believe the lie. At some point soon, physical gold and silver will go to their fundamental value. You watch that confidence level, but get your resilience in place. And we have two areas that we have to work on with that. One is locally, because you have to create surety in food, water, energy, security, barterability, wealth preservation, community, and shelter. You need those things to remain independent, to maintain your freedom, and to have a reasonable standard of living. But globally, we have to come together as citizens for sound money and demand redeemable gold, sound money that puts restrictions on what governments and central bankers can do and puts the power of the purse back in the people's hands. Because right now we have no power. Let's take it back. Globally, we can do it if we can get 3% of the population to trade this garbage that they're inflating to zero into sound money, value that is above governments and central bankers. And we can do this if we come together. So please, join us. Become part of the movement for the future. Nothing is more important. And until next we meet, please be safe out there. Bye-bye.